Hello, and welcome to another episode of the Market Pulse series. My name is Rufas Kamau, Markets Analyst at FXPesa. So today we'll be looking at quite a number of things. One is what's currently happening on the economic calendars front. And once we go through that, then we move to look at the technical analysis, try to understand the price action movements on major currency pairs. We will be looking at gold, oil, major stock market indices in the US, as well as stock market indices in Europe. And once we go through this, hopefully everyone will get to gain something. So hello, Caspar, and thank you for joining the session. Let's get things going. So as you can see from the economic calendar, there has been quite a largely quiet day. We didn't have much of major announcements. I think the key highlights for the day would be the CPI from China, or the consumer price index, which is a major indicator of inflation, which basically showed that China is entering into a disinflation period. So with annual or year-over-year inflation moving from 0.0% in the month of September to negative 0.2% in the month of October. What we are seeing is prices generally falling in China. And of course, for producer price index, it moved from negative 2.5% down to negative 2.6%, basically indicating that forward prices are also going down. So this basically means that we should be seeing a slowing economy in China. And as a result of this, there's an overall consensus that China is not doing very well in making a recovery from COVID-19. So what we are seeing is the Chinese engine cooling off, which basically implies lower demand for oil in the global financial markets, China being a major importer of oil. So besides these, we didn't have much except the unemployment claims data. So for the unemployment claims, they came in lower than expected. So I'll try and refresh my page here. So we had 217,000 new people claiming for unemployment insurance. And this is a smaller number compared to the previous reading of 220K. So overall, what we are seeing is that these numbers have been increasing. But then from the report so far, we can see it's almost flattening here. So the overall direction, I think, since the month of June, has been unemployment claims going down and down. And if there's less and less people claiming for unemployment insurance, basically means that the job market is tighter than expected. However, as I had mentioned earlier in the day, and this is during the market snapshot series, which is a series that we do every day from Monday to Friday at 11 a.m. We majorly highlighted the key events for the day, and one of them would be a speech from the ECB President Christine Lagarde. So this one is where she is due to speak at the inauguration of the House of the Euro in Brussels, and this will be happening from 8:30 p.m. So while this is a major central bank governor, that is the ECB president, the most important meeting will be a presentation by the Fed Chair Jerome Powell, where he's due to participate in a panel discussion titled Monetary Challenges in a Global Economy at the Jacques Pollack Annual Research Conference in Washington, D.C. And the interesting thing about this presentation is that audience questions are expected. So whenever the Fed chair is due to present a speech and you have audience questions, the responses to those questions can have a significant impact in the markets because some of these questions may be tailored about US monetary policy. And in answering so questions, in some cases, the Fed chair may leak some information about what they are planning to do with the monetary policy challenges that the US is facing. And this could potentially lead to increased market volatility. So that's why it's so important for traders and a lot of investors as well as traders will be following this speech line to try and understand the developments and basically develop ideas to implement some trades in the markets. So as we head towards the end of the week, we will be looking at the Reserve Bank of Australia monetary policy statement at 3:30 a.m. on Friday. That's tomorrow. Then at 10 a.m., we look at the GDP, or the gross domestic product, for the month of October in the UK. Then later on, we will be looking at Chinese new loans and M2 money supply before focusing on yet another speech by the ECB President Lagarde at 3:30 p.m. And then later on, we close the week by looking at the preliminary University of Michigan Consumer Sentiment Survey. So knowing that we don't have much to go with here, then we can easily identify trading patterns in the charts. So the one key highlight for the day is that the dollar index started off the day quite strongly with a strong bullish momentum. You can see right from the beginning of the day, there was a strong bullish momentum before dropping further back downwards as we entered into the New York session. However, the big sell-off that happened within these 2 hours did not hold for long. And we can see the US dollar index managing to stage a comeback. It's almost bouncing from the same level that was the bottom yesterday. And of course, the bottom on the evening, the day before. So this bottom here, followed by this, and now this, now we can see this possibility of the dollar index potentially even moving higher. However, we cannot ignore the fact that if this was to be determined as a neckline for the dollar index, then now we are seeing quite a familiar pattern. And in this case, what we are seeing is a head and shoulder kind of pattern, where the market formed the first shoulder here on Tuesday. Then on Wednesday, it moves higher and then forms the second shoulder. So the head of this pattern goes back to the same level, which we identify as a neckline. Then in this case, on today, went up higher and then dropped back to the same neckline, eventually completing the pattern in what we describe as a head and shoulder pattern. So a further price action movement below this particular neckline would mean that the dollar index has changed direction and we could be starting to trade the dollar index downwards. However, before the market breaks down and continues moving further downwards, then we continue assuming that the price will continue moving even higher. However, for now, with this pattern being completed, there's a high likelihood that the dollar may continue trading lower. So while a majority of these assets continued the bearish momentum for the week, in the morning, we had projected that the pound USD would continue dropping and eventually get to 1.22155. But then from what we are seeing with the dollar index, the outlook seems more grayish. I don't think it's stronger than it was in the morning, especially considering that particular pattern. So we could be seeing some form of recovery happening in pound USD, and eventually the market gets into the previous resistance at around 1.23359. However, if the dollar index doesn't break, in this case, below this neckline, then in this case, we could be seeing the pound USD continue to lose into the dollar and get to our original target of 1.22155. So the current development basically brings in doubt. So for USD JPY, there was a retest of this area here, and it was happening in the morning. So we projected that the bullish momentum would continue for the day, but then if at some point there was a pullback, a retest again, and then it bounced off from that point. So the original analysis remains the same, a target of 151.7. But then if there's a significant change in the dollar index direction, then this could fade away and the market moves backwards. So as for Euro USD, you can see how it was quite resilient yesterday. Today we projected it to move downwards and retest this area here, which was 1.06840, and further potentially moving to this area of 1.06652. But then upon getting here, it bounced strongly and went even higher. So perhaps another retest of the upper trend line is in play as the dollar continues weakening. So for USD CAD, we had seen a bounce happen here. Sadly, from what we are seeing as the close of this candlestick here, it was indicative of a rejection of higher prices, which was followed by a huge drop in the preceding hours. But then the market is quick making a recovery. So towards the end of the day, we will be monitoring to see how the day ends And of course, that may help us determine how price action may play out tomorrow. So where the dollar is fundamentally strong, this seems more of a technical pullback. So I expect the dollar to continue gaining against other currencies. And in this case, we could be seeing the market now retesting the previous high. So the day's high is now a very important price action level at 1.38058. So as for gold, there was a big sell-off, and we had several targets in mind. So first one at 1953 and the other one at 1946. So this managed to be a pretty strong support, and the market bounced from here, getting back to 1953, and now it's on the way to get to our previous level of 1969, and this is clear as day. So now we expect the price of gold to complete the momentum and eventually get to 1969 as we head into the Sydney session. So for Australian dollar, this was the projection in the morning that the market would drop to this support level of 0.63884. And if there's a clean break, then we start looking for targets around this area here. But then it happened to be a pretty strong support and the market changed direction. And now that we are trading here, if there's a continued rally in the Australian dollar, then we could be seeing even higher prices. However, we identified a pattern that was playing out over the course of the last 1 week, where the market formed a shoulder and then a head and then a shoulder before breaking towards the lower side, which in this case increases the likelihood that the Australian dollar would continue losing to the US dollar. However, after the strong, sharp upwards movement, we could be seeing some further upside. But then if the high breaks the high of the previous shoulder, this is the high of the previous shoulder here. So if the market was to rally and get to this area, then this would invalidate the pattern, especially if it was to form another higher high. But for now, if the market remains here and eventually drops as projected, then we keep playing out with this pattern. So US equity indices have been on a range since the big rally that happened last week. This was the big rally. We had a triangle here early this week. Market broke towards the upper side. Then yesterday, there was a sideways momentum. So in this case, what we are seeing here is the market persistently attempting to move higher, but it's moving on lower momentum, like what happened today. So this basically increases the likelihood that the market may eventually make a turnaround, and we could potentially see the price pulling back downwards. So seeing this area that was acting as the resistance, and now observing the 4-hour candlestick here, almost looking like a doji or a spinning top, then there's potential that the market may, if a big move upwards, then the possibility of the market making a pullback becomes stronger and stronger. So the likelihood of the market making a pullback becomes stronger, which presents a better opportunity compared to trading in the direction of the original move. So it's the same case for US30, but then in this case, you can see the attempt to push back downwards. So in this case, if we were to remove the original analysis here, then we can easily identify where the market has been playing around. So the one area can be marked as the extreme resistance, and the other one can be marked as the extreme support. So from here, all you have to do is to monitor the price action and then look for a potential break. So it would present a much better trading opportunity compared to the upper side, especially considering that this is happening on a trend line that started all the way back in July. So the market has been finding resistance along this trend line for quite a period. And now if this period holds and the market is unable to break, then the potential for the market doing a U-turn and now dropping all the way back to previous support might become quite important, where you could easily risk a small amount of money and target a high return from the eventual drop off. So as for the S&P 500, it's a similar story. So if I was to remove these earlier analysis and then try to look at the price action pattern right from the top of this bullish momentum, we can identify that this area has been acting as a good resistance. So remember, it's coincident with the upper trend line. So if that's the resistance we have been seeing and the support, let's say, follows this path here. So all we have to do is to observe the price action of the S&P 500 and then look for that eventual break. So that break would be happening sooner than later. So if you go to the 1 hour chart, this is how it looks like. So if the market happens to break the lower trend line, then in this case, it would be the signal to go for short selling positions, targeting even lower prices, especially considering that this is falling right on top or on the upper trend line that started back in July. So in this case, there's a good likelihood that this resistance area would hold and the price would drop back towards the lower side. So this is a game of patience, just patiently waiting and eventually executing a trade once you see evidence of a break or basically evidence of a reversal. So in this case, what we are looking for is candlesticks that indicate evidence that sellers have entered this market. So as for Brent oil, we are seeing a recovery that has happened today after a big sell-off over the week. So as you can see, yesterday being Wednesday, Tuesday and Monday, there has been quite a strong sell-off in Brent oil, basically moving, let's say from Monday. That's the highest price we saw on Monday. And the lowest price we saw yesterday was around 9.62% drop in Brent oil prices. So today, it was an eventual reversal. We saw evidence of buyers entering this market. The candlesticks on the 4-hour chart are not very convincing. These are not the candlesticks we are looking for. We are looking for stronger candlesticks indicating a strong entry by buyers. So in this case, it basically implies that the bullish momentum may easily be reversed. And of course, from what we are seeing here, it's a market that was struggling to go up, and now it has changed direction. And there seems to be that possibility that the market may be headed further back downwards. So as we approach the end of the day, we could be seeing the market going to retest the support that we saw yesterday. And that could be happening as soon as we enter, let's say, the Sydney session after the US session. And this could lead to some further drop and retesting of this previous level. So the French 40 index was making a recovery yesterday in the evening, but today has been pretty bullish, retested the previous high and even moved higher. So in this case, indicating some further upside momentum for European equity indices. So it seems to be a theme across board. So also for the Euro 50 cash index or for the Euro Stoxx 50 cash index, we saw the market hitting a strong resistance here, pulling back and then today closing way above that, leading to some further momentum upside after breaking that resistance. And now we are testing yet another resistance, which is an area that we just saw sometimes back. So this area was acting as a resistance, and you can see the price action today after the market got to that area. So now we observe the area again. If there's a clean break, we continue trading higher. But then the real opportunity is when the market eventually changes direction and starts moving back downwards. So for now, we enjoy the bullish momentum, but the higher it goes, the higher the opportunity to go short on these equity indices. So the one asset that has been making all the news is basically Bitcoin, which managed to move up and hit that 8K. That's 7,938. And this is a price action level that we haven't seen before within the year. So this is the highest price of the year, that's 7,961. But then immediately we got to that price action level. You can see how bears have entered this market and forced a very strong reversal. So from here, what I'm seeing, especially from the 4-hour candlestick, is a strong rejection of higher prices, and now the markets are moving further back downwards. So in this case, the most recent low is the low of the week. And of course, there's that potential that Bitcoin price could drop to 34,460 from the current level of 36,089. So from this big sell-off, there's that potential that we could be seeing a reversal of this price action and the market perhaps getting back to the bottom of the week. So as for New Zealand USD, also making an impressive recovery. But then, as I mentioned, don't ignore the dollar. The dollar is currently very strong, both fundamentally and technically. So even if we are seeing these strong rallies being formed, I expect the original move of the week to continue. So in this case, I'm still on the bearish bias for New Zealand USD. Expect some further downside to be happening in this pair. So for USD CHF, we saw a strong momentum early in the morning. The dollar was very promising to move up, but then later on it moved back downwards, and then the entire thesis remains the same, that we continue seeing some further upward trajectory on the dollar price action. So there seems to be a trend line that is forming on this lower side. So first time the market bounced from here, second time, and now the third time. So a potential entry by buyers here would perhaps even accelerate price to an even higher level. So from this price action pattern, you can also observe that there is this area here, which is basically forming this triangle. So from the 15 minutes chart, you can easily zoom out and see how the market has been doing the upward, downward momentum, which basically helps you in identifying a potential break. So I'm looking at the comment section right now. Hello, Moses. Can see a lot of shorts in the house. Hello, why is it that the brokers, almost all prices is always somehow different from that? From what? Bloomberg, Yahoo, CNBC are reporting, e.g. Nasdaq 100 may be 13,000, yet in the broker side it is 14,000. So there are different assets. So when we talk especially about equity indices, you'll find that there are different assets offered by different liquidity providers. And those different assets come with different pricings as well as different levels of leverage. So in that case, you might find that the pricing from certain websites cover an asset in a different way, but then the overall idea or direction seems to be extremely positively correlated. So while some assets may be priced differently, the overall idea or direction is the same. So on top of that, there's also these mix-up between indices and ETFs. So sometimes you might be looking for the Nasdaq 100. Nasdaq 100 is issued in two ways. There's the Nasdaq 100 stock market index, which is basically a weighted average of the 100 top technology stocks in the Nasdaq. And then there's the Nasdaq 100 ETF. So those are completely two different assets. So if Bloomberg is reporting on the ETF and I'm analyzing the benchmark index, then in that case, you might see some different pricing. So another good question, it never gets to a point where the news sites and the brokers have the same exact figures. They receive their quotes from a different source, definitely. So when you're looking at news websites, first of all, they don't configure their websites to track price second by second. They will have delays. So in most cases, they will either have 5-minute delays, 1-minute delays, or even 10-minute delays. But then when you're trading on your platform, you're getting updates by the second. So in that case, you basically get completely different outcomes when you're comparing these things. So the news websites are easy for doing analysis and understanding concepts. But then if you're looking at very specific price action levels, then the trading platform tends to be more superior because it gives you more accurate representation. So if you compare across different brokers, you'd realize that the prices are the same for the same assets. And then if you compare that with the news, you'll notice that you'll most probably find a discrepancy. And that discrepancy is because of the delay in price feed and of course, the source of their data. So thank you very much, guys. Thank you for your time. I hope you are able to identify a number of price action patterns today, and you will be tracking this. And hopefully, if there is a trading opportunity, then you'll be able to capture that. So also a reminder, the latest episode of the Bullish Banter podcast is out. So you can check it out on Spotify. You can check it out on all podcast platforms, Google, Apple Podcast, as well as YouTube. And in YouTube, it's available on the FX Pesa channel. So besides that, thank you very much, guys. And last point, remember, we have the Novice to Pro series available on FX Pesa YouTube. So these are 10 episode course, basically designed to help you transition from a complete beginner to a pro level trader. So all you have to do is go to FX Pesa channel on YouTube, look for the playlist, and then identify the playlist with Novice to Pro. Go through these 10 episodes, and from each episode, try to practice and learn the ideas that are presented therein. And once you go through these, hopefully you'll be able to acquire that skill and become a better trader. And once you become a better trader, then you can go live and start making something for yourself. So thank you, guys, and I hope to see you on the next session. Tomorrow is a Friday, so I'm not the one presenting the market pulse. It will be Samson Mzera from Eldoret, and hopefully you'll get to grab some good opportunities. Thank you.